housing projects. So this is also a very lucrative offer. It's a student housing project. This is an hostel. This is a land. This is a building you can own, and you understand, also make money from it. And this is an engineering predicted income with student housing. So the student housing hostel works because demand is predictable and recurring. For everybody that have come to university, which I know we did, the demand of hostels and locations around schools is high. And this project that we have is called Livana. Livana is directly opposite FUNAB University. FUNAB University is a Federal University of Agriculture in Alabata, Abeokuta, directly opposite FUNAB. And currently, FUNAB is also affiliated with a new university. So they now offer medicine courses, medical courses, engineering courses, and so on. So the population of that school now is bigger because the students that are now coming out, they are bigger than the way they used to be before. There is need for more housing accommodation because we've carried out our market analysis. What are the things people need? Not just you creating real estate offer, come and buy land, come and, you need to create things that solve problem and at the same time give investors money at the same time. Just by solving a problem, you are also getting profits from the problem you solve. So student housing works because demand is predictable and recurrent. There is always consistent because as one set are passing out, another set are trooping in. Once you have an apartment or a building that is fully managed, so that it's sustainable and long term, that is the important part of it, sustainable. You're going to be making consistent money. The demand is high. The income is what? To rent-based cash flow, and you have a focused predicted income. So let's move on. So let's talk about the numbers. A clear path to annual returns. We have the entry tithes and the capital required. So for you to, like I said, this is also a cash flow investment. It's a cash flow investment, but this is a building. And when you're buying a building, when you're buying a house, when you're buying a structure, it is different from when you are buying a land. A unit is 11 million naira, and with an initial deposit of 2 million naira, you can own a unit of this student housing project, the studio apartments. 2 units goes for 31 million naira. That's like a 2 million naira discount. 5 units go for 50.5 million naira. That's about 4.5 million naira discount. And 10 units go for 100 million naira. That's about 11 million naira discounted. And there's also option for your blocks available. So let's just quickly run about the 3-year projection table so you will know that, okay, this is the number, this is the figure of what I am getting. So if you allocate 11 million naira to buy a whole unit, by the way, this also have a flexible payment plan for up to 12 months, and eventually you allocate 11 million naira for your. Hear me? Hello?
Yes.
All right, understand. So from one unit, your annual cash flow from one unit is within 1 million to 1.2 million naira. And you have what we call asset value at the end of 1 year. Your asset value is the cost of you buying the land and cash flow. So at the end of the 1 year, because this 11 million naira you are actually buying it is at a pre-launch price, the current market value is 12.5 million because it's an off-plan project. An off-plan project sells below the market value. So you are getting it at a discounted price. That's why it's going for 11 million naira. So by the time it's fully developed, definitely it's now selling at the current market price, which is 12.5 million naira. So your asset value for that property is now 12.5 million naira, plus you have 1 million to 1.2 million naira cash flow as rental income. So now let's go to the asset value at the end of year 2. Lands and property appreciates. So if last 2025, a unit is 12.5 million by December, by 2026 December, at least the minimum, we are working with least projection year. So there's every tendency you are getting more than this. But this is at worst case scenario. The asset value is now 13.5 million naira for a property you bought at 11 million naira. And you also have a cash flow of about 1.2 million naira. At the end of year 3, the asset value now worth 15 million naira for one unit that you bought 11 million naira. So that means your 11 million naira has successfully gone to 15 million naira after 3 years. And you have a cash flow of about 1.5 million naira. And that goes on and on. So you can see that each year consecutively, the price of the property increases. And also your cash flow, your rental value also increases. So that's how it works with real estate. So now let's do the allocation for 3 units, which is 31 million naira, 3 units. And your annual cash flow for that year is about 3 million to 3.6 million. So at the end of year 1, you're having about 37.5 million naira for a property you bought for 31 million naira. Is now worth 37.5 million naira plus your rental value about 3 million to 3.6 million naira. At the end of year 2, your asset value now worth 40.5 million naira for a property you bought 31 million naira. And you also have a cash flow about 3.6 million naira. At the end of year 3, your property value now worth 45 million naira plus 4.5 million naira cash flow. And this goes on and on. This goes on. I just did 3 years just for this analysis. So let's assume you are going for 5 units, which is 50.5 million. So if you invested 50.5 million naira in 2026, you're going to be expecting 5 million to 6 million naira profits as cash flow. Cash flow. That is like your rental income, not even the capital appreciation. At the end of year 1, your property that you bought 50.5 million naira now worth 62.5 million naira. Remember, this is 5 units plus a 5 million to 6 million naira cash flow. That is the rental income. At the end of year 2, your income is now 67.5 million naira for the asset value. For a property you bought 50.5 million naira. That is about 17 million naira capital appreciation. Plus, you are getting a 6 million naira cash flow again. At the end of year 3, you are getting 75 million naira as asset value. That's about 25 million naira capital appreciation in the space of 3 years. So now imagine if you have it in the space of 5 years, in the space of 10 years, in the space of 15 years. Your cash flow is 7.5 million naira, and this is how it keeps increasing. It keeps on increasing. So this model prioritizes consistent, growing rental income, making it a powerful cash flow component in a portfolio. So let's move on. So let's just use hypothetical allocation for investors that have 50.5 million naira capital. So you can allocate about half of it in the farming projects and half of it also in the student housing projects. We're just using 50.5 million naira. Definitely, an investor with 3 million naira can still go with 5 million. It depends on your budget. I've said it. There is no one size fits all when it comes to real estate investment. You do your investments the way it suits you, the way your budget determines it, and I will also do my own the way my budget determines it, the way it suits me. So we are just trying to, the 2 projects now. We have Heritage Farm City, that is the farming project, and the student housing project called Livana. So the primary function for Heritage Farm City is what? Stability, long-term growth. The students' predictable cash flow. Capital entry, low barrier for the farming projects. And for the students' housing project is medium, 11 million naira. Your time for return, 8 to 12 months for short-term crops. And this is what? First rental cycle. Once they get rented, you're going to get paid for it. The return is what? Hybrid, farm income plus land appreciation. And this one is what? Primarily rental income plus capital appreciation on the property itself. The risk factor is what? Is mitigated by fundamental food demand and also expert hands on ground. It's going to be managed by experts. And also the mitigation is also reduced because you have a focused market. The students are predictable. There's always demand, high demand. So this is best for diversification and legacy wealth building. This is best for if you want consistent operational income generation. Your numbers are unique. Your strategy should be too. So the framework we have discussed are universal, but the right allocation depends on your specific capital. Most importantly, your specific capital, your capital determine your risk appetite and your financial goals. The next step is only to apply thinking to your personal situation. So you can book a one-on-one portfolio structuring call with me, which I'm going to upload on the group chat immediately after this call. So if you are, let's have a portfolio structuring call so you can know the best investment for you to do based on your capital, based on your risk appetite, and based on your financial and real estate goal. So we've come to the end of this. Let me stop sharing my screen. So now let me entertain questions. So someone asked a question. Please, who was that asked that question? The activities on the land and the minimum amount. Please, who asked that question? There's a person.
It's me, Emmanuel.
Okay, Mr. Emmanuel.
Yes, I'm with you.
All right, sir. So Mr. Emmanuel asked that are you the one that is going to structure like the activity, basically the activities? That's why I said this is a farming project, you own the land, you are an investor, you are not a worker. Do you understand? Once you are making use of the farm managers are the ones to handle everything from clearing down to planting to harvesting, even down to selling of the crops, because they already have off-takers that we buy this thing from them directly. They already have off-takers. Off-takers can be from companies, from private individuals, because we have some individuals that this is the business they do. They just buy directly from the farms and they sell, or they even export, depending. So they'll be the one to sell it. Do you understand, sir? And also you ask
Yes.
the minimum capital. It depends on your scale. Do you understand? It depends on your scale. If you are going for 1 acre, which I think is the best if you want to start commercial farming, not backyard farming, is 1 acre, which is 6 plots. And for the land is 3.6 million naira for the land, and you own the land. Do you understand? You're going to be getting documents on the land. You have the rights, legal rights for the land. It belongs to you. The land appreciates in value and you farm on it. So let's say for 1 acre, you are getting your seedlings free for 1 acre. You're just going to pay for documentation and all of that. If you're going for 1 acre, some quota is about 4 million to 5 million naira for 1 acre. Do you understand, sir?